So today we are talking about the state of accounts payable maturity in 2026. We have a lot of really fascinating and new data to show you all, so we're super excited for this. My name is Mike. I'm the CMO here at Ottimate. I am honored to be joined by my colleague, Dan Kim, our CFO. Dan, thanks for being here.
Happy to be here. This is obviously a topic I'm very excited about, so I look forward to digging in.
So, first of all, thank you to thousands of people who have downloaded this report. I think it's about 30, 45 days old now, so it's pretty hot off the press. We are going to walk you through the findings of this report. If you do not yet have your copy, whip out your phone, take a quick picture of this. It's completely free. And if you missed the QR code, fear not, we will have this up at the end of the presentation. So what is the report all about? Well, we surveyed over 200 finance leaders across a number of different verticals, all in the United States. And we basically asked them, where do they stand with AP automation? What's working, what's not, and what's holding them back? The report was generated by a third party called NewtonX. We wanted to do that to remove any bias in the report. So fear not, this is not a thinly veiled sales presentation. This is real third party unbiased data. So let me not bury the lead here. The headline that we got, which is pretty clear, most teams have adopted some level of automation, but the piecemeal approach is leaving major gaps. Now, we're going to unpack those gaps today. We're going to discuss why it's impacting you and your business, and we're going to talk about what it actually takes to close them. So why is partial automation the headline of this presentation? Well, you may feel like it's not the end of the world, but when you couple it with the pressures that you are facing as a finance professional, you can start to kind of understand why a fractious invoice-to-payment lifecycle can have significant productivity and profitability implications on your business. All right, Dan, are we ready to get into it?
Let's go.
All right, so let's set the stage. Before we tackle the data from the report, I want to talk about the environment that you are operating in right now, because the pressures have never been higher, right? So we asked finance leaders what's keeping them up at night, everyone's favorite question, and the answers came in thick and fast, unfortunately. So firstly, staff loss and turnover due to either belt tightening or the struggle to find the right candidates. Finance teams are just being asked to do more with less, right? Now, that might be related to the economy. Folks are a little wary of spending their hard-earned dollars. But regardless of whether that's you or not, margin leakage is something that finance teams are being asked to take responsibility for. And this can include things like preventing unnecessary overpayments, catching duplicate invoices, et cetera, et cetera. Then you've got the month-end close, right? Which is everyone's favorite thing to do. I know so. Now, of course, the pressure here is often the fight against accuracy and time, right? Then you've got compliance and the regulatory piece of it. This is a ever-changing landscape of things like tax laws, audit requirements, and reporting standards. And keeping up with these changes, quite honestly, is a job in itself. Then there's fraud. So artificial intelligence is wonderful in many ways, but it's also increasing the ease of which fraudulent invoices can be created. I'm sure we've all seen examples of them out there. Also, let's just face it, there's a lot of bad actors in the world, and I don't mean Ryan Reynolds. So it's important that we're able to protect our businesses. Then there's audit readiness. Now, we know that call can come at any time, and providing that information to third-party auditors. I mean, let's be honest, we're all friends here. It's an absolute time sap. And finally, cash flow management. So maintaining healthy working capital while balancing vendor payment terms, balancing collections and forecasting accuracy. It is not easy. These are not abstract challenges that we're talking about. These are things that move a finance team from knowing they have a problem to actually doing something about it. And what's interesting is that every single one of these pressures is made worse when your accounts payable process is fragmented or manual. So, Dan, you're obviously CFO, you're living this every day. When you look at this list, which pressures hit the hardest for you right now?
Uh, Kind of funny, Mike. I mean, honestly, and unfortunately, it's kind of all of them, right? Which is exactly what the problem is. But if I had to pick one to start, it would be cash flow management. This is definitely the one that keeps me up at night. I think about cash and cash flow pretty much all the time as a CFO. You know, inflation has been an issue for what, almost 6 years now. So you just need to go down to your local supermarket and butter at $6. Like that's crazy, and that's flowing through companies' P&Ls. Too many companies are now private equity owned, have high levels of debt, compound that with high interest rates. And fundamentally, you need to run a very tight ship from a cash perspective, as it's just the lifeblood of any business, and your payables and your outflows are obviously a critical part of that. I would say number two is probably staff turnover. When someone on the AP team leaves, they don't just leave an empty chair. They're taking years of tribal knowledge with them, know-how, vendor relationships. And so really we spend a lot of time trying to systematize and document as much as we can. And then I probably the third one I mentioned here is leakage around margins, which is kind of the quiet killer. Manual processes basically kind of just are a slow leak of the bottom of the boat, really preventing us from scaling efficiently. So as a CFO, one of the things I really focus on is trying to make existing functions more efficient as we grow. This is going to make it a little wonky here, but if your cost base, like your AP department, scales at the same rate of growth as your revenue does, well, you're going to end up with lower margins at the end of the day because you always need to add some additional overhead as your company gets larger. So you really need to find efficiencies in all of your existing processes while growing just to even keep margins the same. So efficiencies are absolutely critical. So margin leakage, huge, and hopefully that example makes sense. But really it's a compounding of all these things that are the real issue, because any one of these you can kind of handle, but when it's all of them at the same time, then your accounting team is really spending a lot of time firefighting instead of really trying to focus on value creation.
Yeah, and we're going to talk about firefighting and how the perceived improvement of AP automation to help with that isn't quite hitting home. I also will say $6 for butter, good price, especially if you live in Boston. So, okay, so before we jump into the findings, I'm going to use the term invoice to payment lifecycle quite a lot. And I just want to make sure everyone's on the same page by what we mean here. So, this is the journey an invoice takes from the moment it arrives all the way through to the moment that it's paid. It starts with you receiving an invoice, of course. Now, that invoice is reviewed for duplicates or fraud. And then the data is extracted from the invoice and mapped to your various GL codes, right? That's kind of the whole core purpose of accounts payable. Now, that invoice might be compared to a purchase order, a receipt, or a catalog before another review of potential cost variances is completed. Then the invoice needs to be approved by the powers that be, whoever that is. And once approved, you have to onboard the new vendor before paying the invoices. And then you have the fun of either month end close, quarter end, reconciliation, and then, of course, the audit pops up from nowhere, right? So that's a lot. And the question isn't whether or not you've automated one or two of these steps, it's whether the whole chain works together. Because when any one piece of this is down or it's manual or it's disconnected, it creates a drag on everything else downstream. So kind of picture this slide when we talk through the data. Okay, enough. We should talk about the data, right? The data that's in our report. So let's talk about where teams actually stand with automation. Here's the sort of big number that punches me in the face. Almost half of finance professionals report that their automation tools deliver minimal or no cost savings, right? That's seemingly as a huge gap between expectation and reality. And it kind of makes sense when you look at how automation has been adopted, right? The vast majority of organizations, almost 90%, are running a blend of automation and manual workflows. So if you look back at that slide I just showed you, they've automated a step or two, maybe invoice ingestion or duplicate detection, but they're still maybe hand coding, GL mapping. They're maybe doing manual reconciliation. Maybe they're doing payments by hand. And as I mentioned earlier, only 4% of companies have fully automated accounts payable all the way from the beginning to the finish with no manual touch points. 4%, right? So partial automation it's kind of became the default, and that's the problem. Partial automation doesn't mean that you're halfway there. It means that the manual work just shifts from one piece of the process to another, right? So Dan, why? Because of course AP automation is very common these days. Why do you think teams are investing in it but not seeing the payoff?
Yeah, I think that's a good question. I think it's something that a lot of companies do struggle with, and I think what happens here is that teams buy a tool, slap an automation sticker on it, and kind of just declare victory. But I think the issue is here that you really just can't automate one step in a 10-step process. And the fundamental issue is that it really creates data silos when you just have point solutions. So your invoice capture tool doesn't talk to the approval tool, which doesn't talk to the payment tool. And suddenly your AP team just becomes kind of a very expensive translation service between the different systems. And that starts eating into the ROI. And I've seen it firsthand. You automate data extraction, you feel great about it, and you might get some efficiencies from it. But then now you're also having to realize that that bottleneck's just moved to another part of the business or the flow. So maybe it's coding, maybe it's approvals, like you said. And so I think that the key is just not really looking at it as a comprehensive solution.
Yeah, I think silos is a great term. That kind of feels like the trap a little bit, right? You've automated one piece, you're like, oh great, we've done it, but you haven't actually changed the overall efficiency of the output or the entire process, right? So let's go back to that life cycle slide. Now it looks a little bit different because when you overlay where most teams have actually automated, you do start to see the gaps. Now the highlighted steps in blue here, and apologies if you're colorblind, but they're the sort of darker boxes. This is where automation typically exists. Maybe you can extract the invoice and you can map it to your GL codes, but you still have to manually review each one for duplicates, for fraud, for cost discrepancies, so on and so forth. And remember, only 4% of companies actually have this entire process automated. So the likelihood is that part of this is manual for you today, but fear not, you're obviously not alone. Now, you have pockets of efficiency surrounded by manual work, to kind of Dan's silo comment there. And those manual steps become bottlenecks that slow the entire chain down. It's why teams feel like they've invested in automation, they feel better about it, but they just aren't seeing the results. And of course, this amplifies some of those pressures that we talked about at the beginning of the presentation, like month-end close, like protecting your margins, and so on and so forth. So let's start at the beginning of that slide, and of course, the beginning is invoice ingestion, right? So over 50% of folks, more than half, say their invoice ingestion and approval workflows aren't performing well, and this is kind of the whole point of AP, right? Automated processing. This is the core. Now, if your intake and approvals aren't working, then everything else downstream really suffers. The three-way matching, the cash flow forecasting, financial planning, so on and so forth. So Dan, this really, of all the data points, was the one that surprised me the most. I thought after, AP automation's been around forever, I would feel like folks would have crushed this. But what does this tell you that when the core workflows aren't performing, and what does it mean to you?
Yeah, so it means that a couple of things. I mean, I think one thing for sure is that it means that I'm making decisions basically with one hand tied behind my back. When the approvals are stuck in someone's inbox or invoices are sitting in a pile somewhere, my forecast as a CFO is wrong even before I open up the spreadsheet. And this is the thing. It's good enough is one of the most kind of expensive phrases in finance when it comes to processes. Good enough means that your team is building workarounds in Excel and you've got all these different emails and manual things going around and it creates all this time where every minute that they're spending time going after approvals, it means that they're not helping you understand where the business is going, where you're using money and where you can grow. And I think that's the power of automation and AI is it that it really does help reduce some of these inefficiencies so people can focus on real value. But it's partially the application of it because a lot of businesses have very complex workflows. Many of our customers may have, you know, 50, 100 plus, 200 plus different entities. And when you're trying to do a workflow and think, one solution is going to, AP automation, apply it to my workflow and my company, it doesn't always work. So I think there are a lot of issues there.
Yeah, yeah. I think that great point. I think a lot of teams it may feel like things are functioning on the surface of it, but the inefficiencies underneath that are really draining your team's time. It increases errors, of course, because you've got more manual review and processes that's required, and it still keeps your team in that reactive mode that they were in when they were probably shopping for AP automation to start with. So you mentioned a little bit there about reporting. So again, over half, 52% of organizations spend 11 hours or more each week just running reports. And one in four teams say they then have to rerun those reports because of errors or missing data. So the data problem can be solved by reducing the amount of manual processes. But here's where things kind of get interesting. This is a good example. You've mentioned AI a couple of times where proactive insights can make a huge difference. So unless you've got somebody, this poor person, constantly scouring your invoices, you're never going to service opportunities like um, early payments or discounts on early payments, cost savings from pricing variances, or patterns that might indicate potential overpayment. A human just can't do this at scale. And this is really where I think AI changes the game. Dan, as a CFO, I think you need numbers to make decisions. I've read that somewhere. What happens when the reporting process looks like this? And again, just to reiterate, folks are spending a full day every week generating reports.
Yeah, and 11 hours a week on reporting. I mean, that's kind of crazy. But we've all been there before where you run it once, you get a new piece of information, need to rerun it again. Now this has changed, rerun it a third time, and so forth. But that's, I think, the reality of where a lot of finance teams are living these days. And so for me as a CFO, obviously there's the issues around the inefficiencies of it. But from my perspective, it's really the trust issue. When I walk into a board meeting, I'm talking to my CEO or investors. I need to know that the numbers are right and that they're not going to change. So if I'm quoting figures that were accurate from last Tuesday, then I'm already behind. So that's just too long. And yes, for the accountants in the room, yes, I can put an accrual to make it more accurate. But number one, like it takes time to even know that I need the accrual, and that's not always clear. And two, I need to then calculate exactly how much I need to be accruing for. So to me, the question is that why accrue when you can speed up your process and you can put in actuals instead and and reduce all this reporting that's and all this additional work that just is a result of a slow process. So And I'd say the other thing is that when with reporting the cash flow decisions, they can't wait for the weekly report. I
Sure.
need to know today if I can take advantage of the early pay discount, or if we need to, or can even push a payment. If I see cash is dipping, because my receivables aren't always coming in exactly when they're supposed to either. So that real time information is really key. And so basically, stale data, I think, is just kind of expensive guessing at the end of the day.
Yeah, yeah, couldn't agree more. If it's not real time, it's stale. Okay, so let's talk a little bit about what manual reporting means in operational terms. So 51% of finance teams spend 6 or more days closing their AP books. 6 days. So that's well beyond best practices. And I think it speaks to the sheer amount of volume that they have to do manually, right? Dan mentioned it. This is kind of what the cost of good enough is, right? Folks have just kind of gotten used to these timelines because that's just how long it takes with their current process, right? But when you're spending over a week closing your AP, you're not just slow, but as Dan mentioned, you're operating with stale data, you're delaying cash flow decisions, and you're putting your team through an exhausting grind every month. Then only really to kind of question the data that they're giving you, should it be 6 days late? So Dan, you've been doing this for a while now. I'm sure you've lived this at some point in your career. What does a 6 day close actually, how does it impact the business?
Yeah, yeah, absolutely. No, and I've been in worse situations. 6 days, but 6 days is still long and wild when you think about it. That's more than 1 week work week where you genuinely don't know where your own numbers are. And so there are tangible things like late fees and missed early pay discounts, like you mentioned, which sound small in and of themselves, but they really do add up over the course of the year. But some of the less obvious costs are relevancy, I would say, and probably vendor relationships. I view one of the jobs of the accounting function is to be a scorekeeper. So let's say the inning just ended, i.e., kind of your month is over. And once inning ends, people want to know what's the score? Yeah, how do we do? How do we do against budget? Where do we come in at? And to say that, well, we'll let you know in 6 to 8 days is that's a long time, and a lot of people have probably just simply moved on to other things. So that relevancy is really important to the business. And then vendor relationships. When you're delayed on invoicing, then that means your vendors know when you pay late, and usually they'll remember that at renewal time when it comes to pricing, or when you're in a bind. Let's say you need a delivery expedited and your industry is in a period of tight supply. Those vendor relationships are critical, and good invoice processing helps to control that. And since something helps you pay early, or helps you if you sometimes need to pay late, you can do that. But the key thing is that you need that information to be able to make those decisions. And then finally, there's a human cost. Yeah, my AP team shouldn't be eating dinner at their desk every month end, and that's how you end up losing good people. And that's where you get back to the turnover issue that we were talking about earlier. So ultimately, all these things are quite connected.
Yeah, yeah, that makes sense. And of course, volumes are not going to slow down, right? So I guess the $1 million question is, can your process speed up?
Exactly. Your
Okay,
business grows all the time, right? And so hopefully, and so it only goes in one direction.
100%. It's not going to get any easier, right? So this is a fun one. I think this will get everyone's attention. Fraud. 41% of companies in our survey have experienced invoice fraud in the last year, so almost half. And truthfully, when you think about it, the number's probably higher, right? Because a lot of these payments just aren't identified until well after they happen, if they're caught at all. So here's the thing: as AI evolves, fraud is getting more sophisticated. Again, I'm sure you've all seen examples on the internet, on LinkedIn, or whatever of these pretty convincing looking AI generated invoices. And because of that fractious invoice to payment lifecycle and the scale of your business, a lot of you are getting hundreds of thousands of invoices a week. You cannot expect manual review to 100% catch what often is AI powered fraud and what it's throwing at you. So Dan, how do you think about fraud risk and when your controls are primarily manual, right?
Yeah, no, absolutely. And fraud is a huge issue. And I'm sure everyone on this webinar has at least, 2 to 3 stories of fraud in their organization. So it's pervasive. And like you said, Mike, it's just getting more sophisticated. So I think at the end of the day, to ask a human to catch all that sophisticated fraud at scale is just unrealistic. And it's just not a fair fight anymore. The fraudsters, which can be external parties, can sometimes be your own employees. I think you need to keep your eye on that too. They are using AI to generate invoices that look perfect, like you said, Mike, right logo, right format, right vendor name, and maybe it's just one digit that is off on the bank account. And a tired accountant at 4 p.m. on a Friday is not going to catch that. And so this is where I think the ROI math is kind of brutal. One missed fraudulent wire or invoice can kind of wipe out an entire year of savings by not investing in AP automation. So ultimately, automation really is a budget saving exercise. It's just that you don't see the cost as the costs show up in different places. So so you definitely need your standard controls like that kind of will never go away in some of those manual controls like confirming all banking information via phone, via an independent phone number. That's kind of one of the big things that I'm always helping my team on, i.e., never trust the phone number of a vendor from an email because vendors can get hacked and send you new banking information with a new phone number to call. So that some of those manual things are not going to go away. But it's an arms race, and where you need to have tools on your side like automated account verification. Does the banking information you were provided actually match the name of the vendor? And through technology, you can do things like that to make sure your payments are going to the right place. Do you have systems that monitor anomalies and to do it at scale? And so, unfortunately, manual processes for fraud detection just don't work. It's just there's too many transactions.
True. You almost know too much about fraud, Dan. It's scary. I don't think I'm going to be reading your telephone numbers and your emails anymore. But
Yeah.
Dan is shifting Dan's response really shifted the conversation away from efficiency, which is why AP exists or was founded, to protection, right? Which is not typically what we think of it today. So it's not just about processing invoices faster, but it's about having those systems, those checks and balances that can catch anomalies and flag suspicious activity before the money goes out the door. And again, a lot of these industries that we operate in have razor thin margins, and this is key, right? We don't want to eat into those. So the last data point is I'd say it's kind of parallel a little bit to fraud overpayments because this is one of the most underappreciated areas of financial leakage. Our research found that 5% of all invoices that were paid exceeded the agreed upon terms. 5%, right? So now think of this as scale. If you're processing thousands of invoices a month, 5% is serious money. I mean, it's hundreds of thousands, if not millions. Now, these are cost discrepancies, so not fraud, but things like pricing variances, duplicate charges, things that slip through because nobody has the time or perhaps the visibility to catch them manually. So again, if you're in hospitality or retail, you do not need this. This is going to eat into your already razor thin margins. Dan, in your experience, how much of this kind of leakage goes unnoticed?
Yeah. I mean, if for sure it's more than people want to or really can admit, because it's a problem that's kind of unquantifiable. When you find it, you know that you found it. You found that you were overcharged, but then you kind of don't know what you don't know, which is a problem. And oftentimes people are rarely going to be calling you back saying, "Hey, you paid us too much. Do you want your money back?" You may have some vendors who are honest like that. Many will just say, "Oh, okay, will you just receive the cash?" And that ends up becoming a lot of money at the end of the day. And one of my favorite stories is one of my prior auditors who will remain unnamed they overcharged me on the bill once. So we found it, saved ourselves $10,000. But if my auditor can be overcharging me, that means that you bet that other vendors are doing that. And it may not be intentional. It can be purely an accident, but it happens.
Yeah, the irony of that situation is certainly not lost on our viewers of an auditor overcharging. Okay, so let's bring this back full circle. Give us just a couple of more minutes. We're almost done here. So remember the pressures that I spoke about when we started the presentation. Let's look at how a fully automated invoice to payment process would actually address each one of them. So staff loss and turnover. Well, when you automate the entire process from the ingestion through the payment, you reduce the need for humans in the loop. So your process does not break or slow down when somebody leaves. Then you've got month-end close. So invoices are processed, they're coded, and they're paid faster. This is just great news for companies that are closing or wanting to close in days and not weeks. You've got economy and margin leakage. So you automatically catch cost discrepancies, you find early or opportunities for early payment, you're able to analyze price variations, and you protect those margins that you've worked so hard to get. Cash flow management, Dan mentioned this, visibility into where your money is becomes real time, so you're not making stale decisions. Compliance and audit readiness. So your process adapts to changes in tax laws and auditing standards and all that jazz without slowing you down. And finally, fraud. Fraud is only going to get smarter, and you need to be able to automatically identify when it's happening to you before it's too late. Dan, there's a lot on here, but what really kind of stands out to you here on this slide?
Yeah, no, I think this is a great slide. And to me, what really stands out is that this kind of reframes accounts payable as something other than just a cost center. So, in the words of one of our favorite clients, she's a controller at a healthcare company. She says accounts payable is way oversimplified, and I totally agree with her. Everyone thinks it's this clerical back office, black and white function, just simply record information and you're done. And that's AP. But it isn't. For years, maybe that's what it was. And you only you heard from the AP department when something was wrong. But really, when you automate the full life cycle, AP becomes more so a source of intelligence, margin protection, all the things that you're talking about, and it turns into a more strategic department. And I think this slide shows like the nuances that's actually involved in the accounts payable process that many people simply don't understand. And the great thing is that you don't need to solve just one problem at a time. There are ways of automating and getting the right systems in place where you could kind of do them all at the same time. So instead of playing whack-a-mole, you can find actually a comprehensive solution to a number of issues at the same time.
Got it. Got it. So if the solution seems clear, then you might be kind of wondering, well, why is there only 4% of companies that have actually got a fully automated process? Here's the bottom line, friends. Owning an accounts payable software does not mean you have automated your invoice to payment lifecycle, right? Manual data entry and review still the number one pain point for finance teams, even if they own an AP platform. So that tells you everything, right? Teams, they bought a tool, they're expecting to solve the problem, but the tool only covers part of the process. The rest is still manual, it's still error prone, and it's still slow. And I think the sort of takeaway here is there's a difference between having AP software and having AP automation. So here's another shift that happened. And Dan kind of alluded to it in a lot of his answers over the last couple of questions. Historically, when people talk about AP automation, the pitch was all about productivity, right? It's reducing time spent on invoice processing. It's speeding up approvals. It's getting payment out the door. Those things still matter. Don't get me wrong. But today, the conversation has evolved, right? It's not just about getting faster. It's about margin prevention. It's about reducing shrinkage. It's about defending your bottom line. It's identifying cost saving opportunities that you did not know existed. It's mitigating that fraud before it even gets close to your bottom line. And the best AP automation today isn't just doing what your team used to do faster, but it's doing the things that your team could never do at all, right? Like scanning every invoice against contracted rates. It's about flagging anomalies in real time, servicing insights that protect your margins. Again, with the amount of scale that you have in your business, impossible for a human to do it. Dan, how do you think of this shift, not away from productivity, but with productivity as the foundation, and then profitability or margin protection on top of that?
Yeah, no, absolutely. I mean, in my mind, this is a promotion, right? For the AP department, the AP managers, where it's you're actually doing more strategic work at the end of the day, and you're actually on the front lines of a different type of management now. And so it's more value added work. And if your automation is only making you do things faster, then you're basically solving for problems from a decade ago, but because your automation really needs to do more in this day and age. And to your point, Mike, the AI allows you to do things you were never allowed to do before. So I think that the one of the challenges is going to be to try and start thinking about how to view your AP department as kind of that strategic department within your company, and to move away from that just simple kind of, yeah, invoice processing mindset.
Yeah, that makes sense. So we always like to finish on something that's practical for our presentations. We've thrown a lot of data at you already, and you might be thinking, "Well, geez, where do I stand? How would I answer those questions as part of the survey?" So here's a quick self-assessment that you can run through with your team. Ask yourself these questions. I'm not going to go through each one of them. I'll make sure everyone gets a copy of the recording and the slides. But if you can't answer these questions confidently, or perhaps your answer is, well, geez, the answer might be too long, then you know you have gaps in your automation process. Dan, we are at the end today. So any closing comments, final thoughts?
Yeah. Look, if there's any kind of one takeaway, I think it would be this. It's can be honest about honest with yourself in terms of where you stand. It's easy to look at your AP stack and say, oh, we've got tools, we hired this vendor, we're fine. But having tools, having vendors is not the same thing as truly being automated. So I think running through that self-assessment, Mike, just like you walked through, is really important. And I wouldn't view any of these as a failure if it's too long or not doing well against one of those. It's really an opportunity at the end of the day. And that gap between partial automation and full unified automation is only growing. And so in many ways, the cost of waiting is higher than the cost of acting. So get off my soapbox now. But I think we just doing a really good assessment, I think, is really critical.
Yeah, and certainly don't see it as a failure. As Dan said, as I mentioned, only 4% of companies have automated this entire process. So the vast majority of us haven't. All right, everybody. Well, thank you, Dan, for joining me today. And thanks, everybody else. As I said, if you want to grab your free copy of the State of AP Maturity for 2026, just whip out your phone and take a picture of that QR code. And if you'd like to see what unified AP automation looks like, we'd love to show you. Just go to our website, automate.com /demo. Thanks, everybody. We'll be in touch with the recording and the slides. Any questions that you may have for either one of us, our emails are just our first name, period, last name at automate.com. It's been an absolute pleasure. Sorry for going a few minutes over. And Dan, enjoy that sunny weather in Los Angeles.
Yeah. Thanks, Mike. See
Cheers,
you.
everyone. Thank you.